Another point I want to discuss briefly is the importance of reputation, because obviously, as you mentioned, the major shareholder in this company is also a major shareholder in other companies sitting right next to you, basically in the office. How important has it been to be, have a great reputation? And when you lease, maybe some people can think that, maybe it's easier to get a good deal when you share the office space versus, a deal across continents. So how important has it been to find, the right balance in terms of not getting any conflict of interest? Or is that not an issue at all? It's super easy to avoid that. Or can those issues arise just because people may think they arrive?
Yeah, well, it's of course it's a very valid question. We share office space with Frontline and Golden Ocean and Flex LNG. But what we share is reception services, canteen, and some back office functions where we own in a shared company, which is sort of the main things we share. We run it very separate. We have separate boards. As you mentioned, we have a large shareholder in the Fredriksen family. They own around 20% of the company, so we have 80% other investors, of course. So I would say it's run very independent. We have very limited related party business. It started as 100% related party, so that's been a very dramatic change, I would say, over the years. But apart from that, I would say that from an investment community perspective, I think Mr. Fredriksen has had a phenomenal reputation, because unfortunately in shipping you've seen too many examples of companies, listed companies, where management or the principal owners' main focus has been to enrich themselves, it seems, with fees to their own companies and skimming here and there along the way, S&P fees, management fees, sales fees, this and that. There is nothing of that in our structure, nor in our related companies. So it's always been, one share, one vote, one piece of the economics. So which of course is, from an investment perspective or investor perspective, I would say should be very reassuring. They've been extremely investor friendly. There have been, I'm sure, so many chances to exploit situations, but if you look at the Fredriksen family, I would say maybe they behave in a way like a fund or fund manager, because what they see is that if you start sub-optimizing, say if you have one company A and you have company B, if they want to do a deal because both of them think that this is beneficial for me, of course, then they won't, be opposed to it, as long as, corporate governance principles are followed. But if you start cross-subsidizing, i.e. you do a deal between the companies where one company say, I don't really want this, but I have to do it, it will reflect up on the value of each of those two companies. So you can say in the end, the value of their holdings will be reduced if you cross-subsidize from one company to the other. And then, going back to valuation, I mean, over time, consistently, if you just look at, call it the NAV, call it if that's a metric, you look at, typically companies in our wider group have generally been priced well over, call it what's called NAV, and certainly well over NAV compared to other companies in the same sector. And this I think is not a coincidence. It's because investors feel that, okay, if I invest here, yes, you could say absolute, I may pay, marginally more, but if the market moves, I get at least as much, because these companies are much more investable from a corporate governance perspective, and therefore will be more attractive also when markets, move upwards. So I think, the relationship here and having the Fredriksen family as a large investor is phenomenal for us, because it's given us a lot of comfort, certainly at the early years, that we have access to deal flow. We have to remember that Mr. Fredriksen, in his career of more than 60 years now, I don't think anybody has done as many deals as he has over the years. So we have phenomenal access to deal flow, say on the shipbuilding side, with shipyards, but also in the shipping community at large. So, having that, call it resource, I would say, for our shareholders is great. And we have seen deal opportunities coming in, through him, where, if there is a long-term charter type opportunity, he would send them on to us typically.
That's a great answer. I know that this question is a bit hard to answer, but I mean, this is definitely a high performance system to work in. And you've been there for very many years. And if you just look at the reports, it's not given that you will have, this position for so many years. Do you have an answer to why you have been able to be here for such a long time and why you also enjoy being in this environment, which obviously is a high performing environment, right? So it's basically, I don't think you can come here and relax and just rest on your laurels, to say.
No, it's a good question. I don't have a good answer to that. I think it's a combination of the greed and paranoia, as I mentioned earlier, where you have, the only ones who should really celebrate doing a deal are the shipbrokers, because they get their fee when the deal is done. We should, as an owner, we should really only rejoice when the deal is over, when the charter rate has been paid, the ship has been redelivered, and sold or rechartered. That's the only time we should rejoice, because going back to the cyclical nature of the industry, what you have to expect is that things will happen along the way here. Whether that is the financial crisis in 2008, 2009, and back then, the company name was Ship Finance International, as you may recall. In 2009. Our name, therefore, consisted of the two things investors hated. They hated shipping and they hated finance. So that was an interesting cocktail in itself. Then you had the tanker crisis in 2011. Then you had, the offshore crisis, and you had the dry bulk crisis on and off here. So this is a market where you just have to manage through volatility. You have to try to buy the right assets, charter it out to the right people, and manage it along the way. And I think, hopefully a combination of that, hopefully our ability to deal also with situations that don't develop as we hoped for initially when we made the investment, deal with it early and not pretend like it isn't there, is maybe an important factor. But I have a great team. This is not just me. Very professional team, very motivated. And we have fun at work. It's interesting. It gives a lot of energy.
Yeah, because that was the next question, because we talked a lot about greed and paranoia, but don't you also feel it's a case about that sort of the Buffett saying that you also should be able to tap dance to work and really enjoy yourself? Because being in this environment, I mean, you can't lose sleep over bad deals, right? But I don't think losing sleep for many months or years even it's a good path into high performance either. So in some sense, you also need to enjoy the pressure, enjoy the opportunity you have to make a difference, because when you run these operations, like a good operation also means a huge value creation, right? And maybe that's also should be the focus when working in this environment.
Yeah. So of course, I mean, we've just been through 2 restructurings in Seadrill, right, which has been taken a lot of energy, taken a lot of resources. But at the same time, along the way when we were through that, because if we had been only invested in offshore assets, of course it would have been, horrible. But of course, now we've been also invested. We have more container ships than offshore assets. So, part of the portfolio has performed really well, while some of the portfolio has been challenging. And of course, you have to spend the time, you have to do everything that's required. But when we look at new deal opportunities, you have to have that energy. You have to think that this is going to be it. This is going to be the new deal. This is going to be great. And then, of course, as you call it, dissect the sort of a deal opportunity, and you go through it, and you look at the various sort of risk reward parameters, it may or may not materialize. As I said, last year, $1 billion out of $19 billion ended up actually being done in the end. You have to have that focus that the next one, that's a great one.
That's a great way of putting it. If you look at, I mean, we're sitting in Oslo in Norway, but the company is listed in New York, and I mean, it's not listed here in Oslo, so that makes it a bit interesting. So what would be the difference in you sitting in New York and running the operation from New York, closer to the shareholders, which I suspect is mainly US investors, right? But there's probably a big trade-off on good and bad side. But what would be the difference? And has that ever been a discussion of running it from US, or is it better to run it from Norway?
Well, we haven't sort of discussed it so specifically. I think it's not that important necessarily where you run it from. What's important is what kind of deal flow do you have access to, and can you go where you need to go? Remember, we do deals. Our customers are to a smaller degree in the US. We have many more customers in Europe and Asia. So from that perspective, you could say being in Europe. And then you can say, should it be in Oslo? Should it be in London? Should it be, in some other city? I think in Norway, at least what you have here is, call it an underlying, mindset, I would say, from, in the business community, that shipping has always been and continues to be sort of an interesting place to be. I think we attract good talent, because that's the dilemma. If you're in the US, shipping is such a marginal business. And I would say, I wouldn't, up until, say, a few years ago, it didn't, I mean, if you were the smartest, kid out there, you wouldn't go into shipping, right? You would go into tech or some other cooler segments. So, which means that, you have a lot more people, but you don't necessarily attract, better talent individually, I would say. So in a small country like Norway, where shipping has always been big, you have access to resources. Of course, you get access to good resources elsewhere as well, but it's a cost-efficient way. We have some people working, out of Oslo. We have some people working in London, and we have a team, of course, also on Bermuda. So, we could easily run the company from the US, but, as it happens, it works well to run it from Oslo. But importantly, no business decisions are taken in Oslo. We do the administrative work. Decisions are taken, through the board on Bermuda.